Welcome everyone to a short series I'll be starting on the channel called Economics Explained, which is about explaining the various aspects of our current economic system and why these contribute to current social problems. Most of us are familiar with taxes, in the form of income taxes or VAT, which is value-added tax. In the former case, income taxes are levied directly on your wages. In the latter case, VAT is applied directly when you buy consumer goods. There is another kind of tax, though, called capital gains tax, and that is the topic of today's video. To answer the question of why capital gains tax is important and damaging, we first have to ask, what exactly are capital gains taxes? Well, in the case of the previous kinds of taxes, those taxes were levied essentially on production. They apply to work that you have done or products that you are consuming. But capital gains tax are applied only on the sale of what are called non-inventory assets. And what are these? Well, primarily stocks, bonds, and property or real estate, and then only if the capital asset would produce a profit by its sale. The immediate distinction to be made here is that capital gains taxes are not taxes on labor, like income tax or VAT, but rather taxes applied for ownership. Ownership specifically of things that provide the basis for class in our society, namely the ownership of businesses in the case of stocks, and the ownership of property in the case of real estate. It should be clear that there are material differences in the way these taxes are applied to the poor and the wealthy. For the wealthy, their tax is applied only when it benefits them, despite the enormous value that these assets can have relative to others, and of course, the power that the ownership of these assets can bring. For example, in the case of owning stocks, you can control companies, and that can dictate the lives of many other people. Whereas for the poor, their incomes and their consumption of goods will always be taxed, and you can't defer your income tax if you don't make enough to live off on. What this shows us is that for people without assets, which I remind you are the majority of people, the tax system is structured so as to reinforce their position. For people with assets, the tax system is only at best an annoyance. This is one of many ways in which the system defends the rich, and I hope you will join me for more episodes of Economics Explained.